Bet. All right, guys. So, welcome in. If this is the first time you're hearing from me, or if it's not, I'm sure a lot of you guys are from Team Bull or in Team Bull. So, we are chilling. We're gonna go over my trading strategy. It's really simple. This class will probably take around 30 minutes, so hopefully you stay the whole time. And yeah, I used it this week while I was traveling, and I use it almost every single week. So yeah, let's just dive into it. Let's go. Bet. So, yeah, break down the strategy. It's really, really simple, guys. It's like the reason why I love it is because you can't miss it, right? You can't confuse it with other strategies. It's just there in front of your face. If it forms out, you know, you have no guesswork there. It's no guesswork. You feel confident and you have good risk to reward, right? So, find and mark the pre-market high and pre-market low levels. That's the first step. The second step, wait for the fair value gap to form. So we have to identify an impulse move past pre-market high or past pre-market low, and identify that fair value gap within there. So, which I'll show you guys on the live charts in a little bit if you're confused. But the third thing is look for the retest of the fair value gap and pre-market levels. And then the fourth thing is you can use the 8 and the 21 EMA. You can use any EMAs you would like. It's not really a big part of the strategy, but it definitely helps adding some confluence to the strategy. All right, so here's the example of the strategy to the upside. So we have the pre-market high, pre-market low. Price is in this range. Price makes an impulse move higher. We identify a fair value gap within the candles, and we look for that retest and continuation higher. The ultimate goal, of course, if we're going to take this to the upside, is to make new high of day. And the ultimate goal, if we're going to take it to the downside, is to make new low of day, right? And if we get more, then that's great. But that's the ultimate goal, right? This is a scalping strategy. It's not really a long-term type of like, swing trading strategy. This is very short-term scalp. Probably in and out within a few minutes or, maybe 10, 20, 30 minutes at the most. So, yeah, this is what it would look like. Pre-market high, pre-market low. Price breaks through, creates a fair value gap. We find that retest and we continue lower. Any questions there? It might be a little confusing, but I will show you these examples on the chart, so you should feel really confident by the end of this video. Any questions? Good. Bet. 5 minute time frame. Yes, sir. That's what we do. Only with the first fair value gap. Yes. So we'll go through that. We'll go through that. All right. Let's keep going. All right. So here's older examples. Obviously, you can see SPY was at 450. This is a long time ago, but we will go through current examples. So pre-market high set here. Price breaks out, continues higher. We have a fair value gap formed. What happens? This candle comes down, retest. What I really love here about this example and the reason why it's in here is because this candle here drops down, comes into this fair value gap. We retest the EMAs, and we have what? What do we have here on the 5 minute time frame? I only use 5 minute time frame for day trading. Now, some of y'all can work off the 3 minute, the 1 minute. I like working off the 5 minute. It's what I find most consistent. So, what we can see here is price comes down, drops below, and retest that pre-market high, retest into this fair value gap and the EMAs, and we have this candle which was having a lot of selling get bought right back up and closed above that fair value gap and pre-market high. To me, risk to reward wise, this is what I like to see, right? We take a long entry, we put the stop loss below that 5 minute low, and we ride it up, right? Make new high day and more. So this is the type of confirmation I like to see. I like to watch for this 5 minute candle to close, get confirmation, and then go on and take a trade from there. Now, if you guys like to enter off a candle not being closed, that's perfectly fine. But the only issue with that being said is that, this candle could end up not turning, could end up not confirming to the upside and just continue lower. And you'd be putting yourself maybe at a little more risk. As long as your risk is in check, though, regardless, you're good. So, that's one example there. And here we are. I kind of had a plain chart so you can visualize it for yourself. You can see the pre-market high is pretty clear at 451. It's the same exact example, right? But look, this looked like a small move, right? Wait, hold up, sorry. This looks like a small move at the current moment, but look, what happens? Price continues higher, a few dollars higher, right? So this strategy works not only for a scalp, like you will get big moves, but ultimately the overall goal is to make a new high a day or a new low of day, right? So really simple goal. I think that's one of the hardest parts traders struggle with, right? When they hop into a trade, what is the goal, right? They don't know if they are taking a scalp, if they want to be in and out, or they don't know if they should, they want to hold their winners longer and just hold it, and then they kill themselves with it, right? So you have to identify what's the overall goal with the trade before you even hop into it. And this is exactly why I love this strategy. So again, here's another example. We have pre-market high here. We can actually let's see. Well, okay, wait. Let's see something real quick. Pre-market high. And now someone asked about this question. If there's multiple fair value gaps, which one do you use, right? We have a fair value gap here and a fair value gap here. And the only issue with using the first one in this example is that we formed this lower one in the pre-market. What I always say is if you're going to use a fair value gap, you're looking for that gap to be formed in the New York trading session. So I'm looking for price to form that out once price is open. So we have that first fair value gap up there. Um, we have the pre-market high, price breaks out, right? Now we form that fair value gap. Now all we're doing is looking for that pullback to get an entry. You can see here, price comes down into that fair value gap, retest that pre-market high, retest the EMAs, and closes within that gap. If a candle does close within that gap, you can do either two things. One, you could take the position because we did hold the gap, so it's not invalid. The only way a gap is invalid is that the candle comes down and closes below on the 5 minute time frame. So we get this candle confirmation here. You could even wait for this next candle to form out, right? Look, look at this move, right? So you're not missing anything if you wait for confirmation. I think that's the one of a really big issue with traders as well is they just can't wait for that candle to close or wait for confirmation because they feel like they're missing out, right? They feel like this one candle determines, oh, they get FOMO or I'm too late, and then it keeps running and running, and then now they really have FOMO, right? So just wait for 5 minute candle confirmation and have good risk to reward and send it. There's nothing else you could do as long as you have a strategy in place, everything in place, you're chilling. So, um, yeah, and you can see here too as well, when we keep grinding up, what happens? Price just retraces back to the EMAs and to fair value gaps, right? We come down, we push up, we retrace, fair value gap there. Push up, and we keep retracing and kind of holding those gaps. So, I use this strategy, or I chart on or QQQ and SPY, but I take this on NQ and ES all the time. This is a strategy that I use all the time, literally. And this is not my only strategy, guys, but this is one I wanted to cover because it's so simple and effective, and it can relate to a lot of y'all because you enjoy scalping. But for most people, I mean, you guys can confirm in the chat. You guys like being in and out of trades. I'm sure of that. So I only have a few strategies, but they're all based off of fair value gaps and certain levels. So honestly, everything can be correlated really easy. And that's why I love what I do because I have no confusion when I trade. I have no um, this looks bullish, this looks bearish, what should I do? Scenario. I have everything planned out when I'm in and I'm out. And, no trader or no strategy is 100% right. Of course, there's going to be, days where that strategy just doesn't work. And that's 100% happens to every other trader and every other strategy. So, that's why risk management is so, so important. But yeah, so let me show you the trade I took this week. In fact, you know, I think built in the first month of the year, the biggest thing for traders is to really just build a cushion for yourself, right? Build a cushion. Don't kill yourself within the first month. Who wants to go in 2025 in this month and just ruin their trading year in the first month? Like, that is absolutely the worst thing we can do, right? And if you're catching yourself falling into FOMO, falling into bad habits, we have to fix that right now, right? We have to fix that right now, and because that could spiral your year and potentially really ruin your trading. So the biggest thing for me within the first month is take light positions. make sure that I'm building a nice cushion for myself, doing everything right, following my rules, and then, we can start to scale up with size later on in the, once the year starts to get rolling. So, let's find this strategy and let's see what happens here on SPY. In fact, what we can do is, we can use replay mode. I feel like it's a good way, just so you guys can visualize, and we can kind of start with this, right? So here we are on SPY. We have to mark out the pre-market high, and we have to mark out the pre-market low. Now, people always ask me why I'm marking the pre-market low here. It's because it's from 4 a.m. on. From 4 a.m., I will chart the pre-market. Again, it's all about your perspective. If you want to mark it from 8:30 on, if you want to mark it from 7:30, whatever the hell you want is good. But you have to back test and find things that work for yourself, and this is what works for me. So we have the pre-market low, pre-market high, and now we have to mark out what? This is little more advanced to the strategy, but it's very important. We have to mark out previous highs, New York session highs, and previous New York session lows, right? Because that's where typically price will trade towards. Now, besides those previous highs or lows, we have to look for more, right? Here's another previous low, and we have previous highs already marked out. So we're good. All right, we're good. And typically, what I like to do here is I want to go here and kind of just make sure that I know my pre-market levels are just different color, right? It's not a New York session high or low. It's just pre-market highs and lows. And then, yeah, so there we go. Perfect. Now let's see what the trading session has for us. Let's go. All right, look. So we have a large move down, right? We tried to break over that pre-market high right off the open, kind of swept that high, and we did have some data that dropped, really pushing us down. But regardless, I don't like to trade data, so this data dropped, and now I'm looking for a trade because we got some directional movement. We're not trading within the data, and obviously our setup's playing out. So that's what I'm watching here. And what can we identify? I know it's a big one, and I know it's a little unorthodox. Usually the fair value gaps are a little smaller, but we have a big one here, right? So we can't just have price, and with a gap this size, we can't just have price come up into this gap and then we just assume price is going to move lower, right? We're going to need more confirmations, right? We're going to need more reasoning. So, um, it's important that we just don't see a candle push up back into this and automatically take it, right? We're gonna make sure we look for, candle confirmations and everything that aligns with our strategy. So let's keep going here. All right, look. So here we actually don't have I have the 21 EMA up, so I can actually show you the 9. Let me see. Give me a second. All right, so we got the 9 up, right? So look, price, what happens? Price makes this fair value gap, makes a move lower. And here's what I want to tell you guys too. When we make this move lower, it's not just a small move, right? This is a big move. And to me, as a trader, using our eyeballs, we can see, well, there should be a lot of sellers within that candle, right? There should be a lot of sellers sitting up there that didn't get filled. That was a big move. It happened quickly. There should be a lot of sellers there, right? So that's kind of my perspective of this. Okay, so price comes back up, retest into this fair value gap. We didn't get a large retest, like we didn't come all the way up into this, but we come really close to that pre-market low, which is close enough, right? We don't want a penny pinch. As long as it's, 10, 20, 30 cents from the level, that's fine. But the biggest thing here is seeing this candle come up, retesting that 9 EMA, retesting that pre-market low, and into that fair value gap. And what are we seeing here? Candle confirmation, right? So if you take this and you don't wait for candle confirmation, right? Initially, you don't know where to put your risk. But with this and seeing that candle confirm, we can put our risk at that pre-market low or putting our risk at that 5-minute high. And now we're going to target the low of day for our first trim. And then obviously, we don't have any levels until 586. Like we don't really have much. I would say, you want to use whole psychological levels. So you want to go down to 590 and so on if you're looking for, continuation of your trade. But at this point in time, you get your entry on that 5 minute candle close, and you can count on your hand, on one hand at least, three to four things that align, right? I mean, you guys can say for yourself, how many of you guys sometimes hop into a trade and have like one reason why? It's fine if you do it, but in my perspective, is that enough confirmation? Does that make you feel confident seeing like one single thing and feeling really confident about the trade? I don't see that. I don't see the market that way. I fail to be confident when only one thing aligns. So, we have multiple things that align. It gives me confidence, and let's see what keeps going on here. So we get obviously our first price target, and we obviously get more. We get new low of day, which is which is our overall target. But if you want to hold this, you absolutely could. It comes up to your break even point. I mean, depending on if you moved your stop loss. I mean, I wouldn't personally be in this trade for that long. I probably would have took it all out at that 590. But as long as that gap is respected and continuing, I mean, this trade looks valid and continues to be valid, right? So, and that's just one example of so many examples I can show you guys. So we have some questions rolling in, and I would love to answer them. So, which indicators are those? So this is the 21 and the 9 EMA. Typically, I only use the 21, but I definitely, if you wanted to if you wanted to use the 9 EMA, it could be definitely helpful. How often do you see this setup per week? So with this setup, I would say maybe two times a week, three times a week. It's not the highest probable setup, guys. It's a scalping setup. I have better setups that are in my cards, in my deck of cards. I would say I would like to see other things form out probably more. But this is a strategy that I use all the time, and it really does work. Sometimes the only issue is you don't see moves like this. What will happen is you'll see moves like this, right? So let me just go back to give you a perspective of what sometimes and most of the time you will see. Let's go to that candle here. So typically what you'll get out of this setup is a little more than a 1-to-1, and you'll get new low of day or new high of day depending on which way you trade. So like I said here, sometimes price will come down, give you that low of day, and then make that move higher, right? So typically what I'm looking for is a scalp out of this, and you can catch more. Obviously, the price can keep moving, but this is typically what you see out of it. And I want to tell you guys that because I'm being realistic. I'm not going to tell you guys that this trade is going to catch you a 1-to-5 risk to reward every time because that's not true. It's not true. Um, I have, I don't have so many different things that I look for in a day. Um, how many cons do I usually generally go in? So, yeah, when I'm trading, it depends on if I'm trading options or futures. I still trade both. Typically, when I'm trading futures, I'm not trading very heavy. Like I said, for the start of the year, I trade 1 to 2 contracts typically on ES or NQ, and at most. But if I'm trading with options, typically I'm trading around 20 to 40 to 50 contracts. So, with this strategy in specific, it's a little lower probability than my other strategy that I teach with fair value gaps and liquidity sweeps. But yeah, so I will size down a little more on this type of setup, but still really good setup, and it works for me a lot. And really small risk to reward, which is the main factor here. Um, I have a question. When do you know to take a trade in the middle of the fair value gap or the beginning? Yeah, so you don't know, right? But you have to wait for confirmation, right? Because this candle here essentially could have just continued higher and came all the way up here. But if you just took this trade right on the touch of this gap, you would have had to be willing to risk all of this upside in this trade. So that's why it's important for this 5 minute candle to form out. We get a candle close. Now we can wait for price to actually Well, now we can structure our risk to reward with that 5 minute high, therefore giving us a very small risk comparable to our reward. That's why it's very important to wait for those closes. I hope that helps. Very helpful webinar. Let's go. Let's go. Big facts. Respected to 21 till it didn't. Love using inverse fair value gaps, which I do look at inverse fair value gaps as well. But I don't want to confuse people. Now, this is with this strategy, I'm always looking for the fair value gap to be respected. Obviously, there's definitely inverse fair value gaps are very good as well in different ways, which we won't get into that. But if you guys want another webinar, I'll run these every week. I don't even care. Honestly, I love teaching and I love helping you guys. So, how do you act, or how do you get a fair value gap? Yeah, so I don't want to trade on the 1 minute time frame personally. I think I mean you guys can probably relate. Let me know in the chat. How many of you trade on the 1 minute and how many do you feel anxious when you're trading on the 1 minute? Like I get anxiety looking at these candles moving so fast. Like it just gives me anxiety. It makes my patience kind of dwindle. I don't like it. That's just my personal opinion. You can always work down to the 1 minute, always work down the lower time frames, but this is recorded, but unfortunately, this recording will only be posted inside Team Bull. So if you want to get inside Team Bull, you can use my link that I can send here if you like. I trade live every single morning. I haven't actually been trading live the last few days because I was in Denver. I will be trading live Friday and then for the rest of the next week and following weeks and all 2025 really. How do you trade today's session? Good question. I didn't actually even look at today's trading session. I'm not even lying, guys. I'm not even joking. I got home from Denver. I flew in today. I got home like 35 minutes ago, like literally at 6 o'clock, basically. So I got right off the flight, came here. So do you always wait for 5 minute confirmation? That's a great question. So you don't have to essentially, but the biggest thing with waiting for 5 minute candle confirmation is identifying your risk, right? Like I said, we're risking that 5 minute high. If you don't wait for that candle to close and this candle continues higher, you kind of have a pretty large risk if you're going to risk this for value gap. So it depends on what your strategy is and how you base your risk to reward and what size you use. But yeah, so it definitely depends. I'm getting a lot of messages, so bear with me, guys. I usually break it down to the 1 minute. Yeah, there's no problem with that. Like there's people that have success on 30-second time frame. It's just not for me. I appreciate that. All of Team Bull looks out with their education, been following for years now. Let's go. 5 minute is the move. I agree. Are you back home now? Yes. Yes, I just got back from Denver. I was with Jadon for the last few days. It was a really good time, man. I love going out to Denver. It's fun. Get to connect with Brandon, um, Jadon, and yeah. My name's GD or Gino. It's not Brandon, but that's okay. Yesterday was good use of the PML. Yeah. Retest. Yeah. So let's go look at previous trading sessions. I mean, listen. And the best part about this too, guys, is that I will run through this exactly step by step with you every single day when I'm live trading. People in the chat can tell you if I'm looking at trades during the live trading session, it's the most valuable thing for a trader because no one wants to take alerts anymore. You can't be profitable over the long term by taking alerts. You need to see it for yourself and build that edge for yourself. So if I can help you, visualize this strategy and feel confident with it, that is literally what my goal is. All right, let's go let's get out of this replay mode. Wow, look at this. Look at this session today, guys. This is brutal. This is a brutal session. Pre-market low, pre-market high. This is why I love pre-market levels. Why, guys? Because you can avoid trading this. But however, we do see something that kind of aligns that I kind of like. We come down here, we sweep that low. We have a liquidity sweep, which is a more advanced. This is what I really look for in my strategy, but a liquidity sweep off a pre-market low is definitely less probable than a New York session high or low. Anyways, we have a liquidity sweep. I don't want to confuse you. We have a liquidity sweep, and for value gap, right? We come down, we hold that gap, candle closed above, nice move higher, new high a day, right? So like I didn't even know that example was there, but like this happens all the time, and there's ways to find the strategy in all different types of markets and market structure. Does your risk change trade by trade? It will. It does definitely trade or change by scenarios, right? If let's say, for example, it's a short weeks, I go risk off. First month of the year, risk off, right? Or for example, my strategy is aligning, but maybe it's missing a retest of the pre-market high or low, and I can't really get multiple confirmations. It's a little less probability. I'll take, less size. What is the name of this strategy? Whatever you want to call it. You can call it whatever the hell you want. I like to call it the GD trend trading strategy, right? Because we're trying to, with this, right, with this example, we have this momentum push down, and we're looking to capture this little push up to get a good portion of the trend down, right? So I call it a trend trading strategy, but you can call it whatever the hell you want. Can you quickly explain a fair value gap? Absolutely. So I actually might have a like document that can help you. Let's see if I have anything for you. Bang. Okay, fair value gap. What is it? So I actually have a large PowerPoint going through my exact strategy. For value gap, what is it? So the gap starts by the neighboring candle wicks end. So you can see with with these candles here, typically you want to find a fair value gap within three or more candles. And you can see there's a neighboring wick here on the bullish side, and there's a neighboring wick down here. So in this candle, there's a fair value gap. And same thing to the downside. There's a neighboring wick here, therefore creating a fair value gap from that wick to this wick inside this candle. And what does this essentially mean? It means that, when you're using it to the upside or to the downside, let's go back to the example here. Like when see that there's a neighboring wick here, neighboring wick here. When you're using it, you can only assume within this candle, since there was no previous candle wicks into this zone, that there would be what? What would there be here? Potential sell orders yet to be filled, right? So we can assume once price retraces back, those orders will get filled and continue price to the downside. Now, like I said before, this is not going to happen every time. No strategy is bulletproof. If you get good risk to reward and keep doing the right things, you will make money. How come you don't strictly just trade futures? I really love trading options. I was profitable trading options. I didn't well before I ever traded futures, and I like options just as much. So, I mean, I've been trading futures really light this year. Yeah, I don't. I actually trade. If I trade futures now, I don't even trade at prop firm anymore. I've had multiple payouts, but I don't even like prop firms that much. I'd rather just fund my own live account, to be honest. I want to show you my TradeZilla dashboard. I've been using this strategy with futures for the last few weeks. And you guys could trade live with me too. Like every single trade I take when I'm live is just documented. Like you could see my exact thought process, my entries, my exits, and if I win, I lose, you see it and you can see why I did stuff, right? There's nothing worse than taking stuff and having no clue why you did, right? So it's really nice when you can see all of that. I don't ever go live on YouTube, but I'm going to start. Just starting this past month, I just started trading live, like literally showing my screen, everything. You get to see everything. You get to vibe with me and learn from me. If you like my strategy and you like how I go about things, if it's not for you, you can always cancel at any time or not be a part of it. So, that's always up to you. But yeah, I will start going live on YouTube. And it's not only from me. I trade live, but the best part about Team Bull is you can pick and choose who you like to trade with. You might be a person that's a little more on the wild side, likes to scalp, likes to be fired up. You might want to go trade with Danny, or you might want to go trade with Grizzly. We all have different live traders that are trading every single day. So, so much to learn from, and it's really good. Let's go to the TradeZilla dashboard here. So you can see on the TradeZilla dashboard, the net P&L. is 4,100 on this account. I just started with 5K not that long ago. Like I said, I was just building a little cushion. Just seeing what I can do with the account. Up 4,100. We had one bad day. You can see here, it's a pretty bad day. You can see the win rate, profit factor, trade win 83%, day win 90%. Profit factor around 3, not the greatest. Like I said before, sometimes you won't get the best risk to reward. So yeah, if you guys aren't using TradeZilla already or using a journal source, I would highly recommend you journal your trades. It's super, super important that you just go throughout this year and do the right things. How many times or how long have you guys been trading and maybe like not holding yourself accountable? Do the right things, man. Take this super serious because I know at the end of the day, sometimes it feels like you're just doing it and doing it as a side hustle or whatever, but you could really make this a main income and make it something that provides you freedom. Like I traveled to Denver and I made the amount that I spent in Denver altogether in 2 trades when I was there, So it gives you that freedom to do what you love, and that's the best part about it. Yeah, I have 3 screens. You don't really need it. How many contracts do you use? Depends on the setup. Like when I'm right now, I'm still building a cushion, so I'm not really using any more than I had one pretty big day. But besides that, typically 1 to 2 contracts on futures, to be honest, or I might even go down to the micros. That's really it for this session. I mean, you learned my basic scalping strategy. I hope you guys really enjoyed it. If you guys ever have questions, you can feel free to reach out to me on Instagram, anywheres, or if you want to join Team Bull, I highly recommend you do. You should definitely use that link and join because if you're not making an investment into yourself right now, you're not putting yourself in the position to succeed with trading, then I don't really know what you're doing. I mean, I have so many different testimonials and places, but trading is just the best thing. And if you don't have people by your side to help you at every step of the way, it could be lonely, it could be hard. So invest in yourself, give it a shot. Why not? The biggest thing about trading is having that good support and also having someone to hold you accountable. I'm here to hold you accountable. Look, I told you to get your journaling process up. Get some type of journal, whether it's a notepad, whether it's TradeZilla, whatever it is. Lock in, get your system right. Feel confident. Don't just take trades because someone else is. Do all the right things this year. Let's go. Love y'all. Peace out. Have a great day tomorrow. Hit the gym. Level up. Peace.